Yo, what's up, everybody? Welcome to the Sunday Gen Wealth. This is episode 3. Me and ZTS Rhythm are here, and we're going to take a look at some stuff today. We're going to jump into some heavy Bitcoin and economy data, especially stuff that's coming out this week. We're going to take a look. Like, is there some hopium that I'm seeing here that we could get a little bounce back up? I'm thinking there might be, but I really we got to jump in on all of it. I'm getting my TV going of it. There we go. If that's live, I can check the live stream. But yeah, welcome guys. This is Generation Wealth. We come at you every Sunday and we break down what's going on for the week ahead, and we just kind of chill. We kind of hang out. Just me, my son, and the alumni gives him an opportunity to get exposure into this wealth of knowledge that we have in this space, and then also, gives you guys a chance to get a little bit of knowledge, so a little bit of information. But welcome everybody if you're just joining in. Appreciate it. Glad to have you guys here. But let's go ahead and get this guy up here. Let's do that. What's up, ZTS Rhythm? How you doing?
What's going on, guys? How y'all doing today? Happy Sunday. Let's get some rest and relaxation from that hard week. I know I definitely needed it. Go ahead and smash that like button. Follow that image right there. All right, what are we getting into today? What's up today?
So we are looking today at a bunch of economic data, guys. We're going to go ahead and jump in on all of that. Let's get it up here on the screen, and let's talk about what I'm seeing. Got to go here. Got to go right there. There we go. Let me adjust my camera here just a little. There we go. And let's go in here. First of all, actually, let's jump back over here and let's give a shout out to everybody in the chat right now, because we had some people in here early, and we got a poll up right now, guys. There's a poll running. We've got it going. Let me see what it says here. The poll is currently saying, and the question was, are boneless wings just chicken nuggets? That's today's question. We're going to pose one of these to you guys every week. Are boneless wings just chicken nuggets? Right now it's 60% yes and 40% no. And guys, I specified with the capital just, like, are they only chicken nuggets? Or is it, is it a little bit different? Is there a different feel to it? Are chicken nuggets, do they have to be flat? I don't know. ZTS, you used to work at Chick-fil-A. Would you say that a chicken nugget and a boneless wing are one and the same, or is a chicken nugget, something that went hard in buffalo sauce? Someone went way too hard on the dip, and now it is something even more. So, what's your opinion?
I am of the belief that they are just chicken nuggets that are hella dipped, hard dipped, sauced up, lost in the sauce. All right. That's all they are. Now, me, I'll eat boneless wings, but it's not as special as bone-in traditional wings. All right. When I want bone-in traditional wings, I will get that. But if I'm on like a time crunch and I'm just like, it's for the flavor of the buffalo, like the buffalo wing with quotation marks, I'll get the boneless.
Fair enough. Fair enough. I don't know. It's like you go to a place and you see the wings there, and you're like, oh, do I want wings? Do they go bone in or boneless? And you're in your head, you're like, it's just the difference of the bone. But I have to say that a traditional wing is a wing, and if it doesn't have the bone in it, it's by default, because it's not like they just stripped the bone out of it and gave you the meat. Like, it's processed. So I think that's a differentiating factor right there. If they had to process the chicken to make it what it is, then at that point it is no longer a wing, it is a chicken nugget. So yeah. But yeah, you guys continue to answer that poll. Let's jump over into this data though, and let's take a look at it, because also let me know, is the music too loud or is it just right? I got a whole playlist back here for you guys, so that's just little, Sunday chill music. Let me know if the volume is good on that. So let's get into the charts. Let's go take a look here and see what we're seeing. We'll talk about Bitcoin first and what's going on with it today. We are continuing to get this just lagging. I'm looking at a daily chart here, guys, and we're just lagging down here at the end of this pull off yesterday that we had. Actually, this would have been Friday because today's Sunday. We had a little bounce there. It started to get some hopium in people's souls, and then the bears took control of it, brought it right back again. Guys, right now we're sitting on a doji candle with the Sunday weekly close. Daily close and weekly close going to happen here in a few hours, and it's just sitting out here as a doji. Doji usually means indecisive. So I will point out, though, on the daily, we did get an uptrend here. We are clipping hard on the True 7, but I do think that the RSI has more room to come down here and lay that on us and see what they're seeing. I also want to come in here. Let's go and click that. There we go. This is going to be our RSI, guys. If I can get it adjusted. My bad. This is our RSI, and it is sitting pretty low, but you can see we can go lower. So I'm actually in the mindset, I'm watching for $43,000 to $45,000 Bitcoin. That would be my point where I come back in. Yeet Corp said Korean boneless chicken wings are breaded breast meat, way better than chicken nuggets. I have had some amazing chicken, especially chicken on a stick in Korea, man. It was delicious. So, but yeah, they do white meat, not dark meat, over there for a lot of their nuggets type stuff. I also think that, which wasn't Korean, it was Japanese, but the kagi chicken, I think it's called. What's it? Do you know what the name of it is, Zach? The spicy breaded chicken over rice. It's do you know?
No, not off the top of my head, unfortunately.
Guys, let me know in the chat if you know what I'm talking about. It's like kagi maybe, kagi chicken. Yeah, it's really good, but it's breast meat. So, excuse me. Anyway, let's get into the charts. I want to talk about the economic data that's coming this week, but this is our current picture here right now, guys. I do want to show you we have lost that key level, that 887. That I've said we need to keep weekly closes above that. This would be here in about 3 or 4 hours, would be the first candle that we've closed beneath this 887, which has held true many, many times on us here. This would be the first one that closes below that. That is a bearish sign for me. And then also looking over here, guys, we've talked about this, that I said we could be dipping back down into the Gaussian channel. Historically, we've done it back here, and we did it back here. We wicked down into it right after the halving there. So this is in line with what I talked about being a bearish indication too, but that there is key support in this Gaussian channel. So, so some things that I want to break down for you guys today. First off, yield curve. We've talked about this yield curve and disinverting, right? This is your Koji. That's it. Koji, I think, is what it's called. No, it's not Katsu. I love Katsu. That's like Japanese schnitzel for chicken. But look at here, what I'm seeing on this yield curve, guys. It's the 2 and 10, and I've got an image here somewhere. Let me find that image. Let me find that image of the 2 and 10 year. It's here in the Fred, I believe. Come here, Freddie. Yep, right there. So this is your 2 and 10 year treasury bonds, guys. And what happens here, you can see we're about to break above it right here. Every time that we uninvert, meaning that the 2 and the 10 year flip back to the way that they should and start rising, every time we break this zero line, every time, without fail in history, since they've been tracking it, that has led to a recession. So one thing that I'm seeing there with that going on is that obviously this means if we have done this without fail, that we're going to have a recession, that we have to look at what happens with recessions, and that is market sell-off. So why does it matter with this? What is the yield curve? It's a visual representation of the difference in the compensation that investors will receive for choosing to buy shorter versus longer term debt. That is a 2 year versus the 10 year. Japanese schnitzel. That's right. Most of the time, bond investors demand a higher return or yield for greater uncertainty that comes with locking away their money. So the yield curve usually slopes upward, right? But when it inverts, let's get down here. What is the disinversion telling us? A restoration of the normal upside. This is the uninverting. This is it getting back to normal, right? This is getting out of that slope, which you can see right here. I just showed you this on the Fred. Okay. A restoration of the normal upward slope of the yield curve or disinversion typically happens when the Fed starts to lower rates or the markets start pricing in looming cuts, which is why we started to come back up back here at the beginning of 2024, because we had predicted that we should see some this year. And you can see that went sideways here. That was during this period of uncertainty that we had. Let me get a little mouse action right in there. That was the uncertainty of how many we were going to have this year, how big, if there was even going to be, be one that took place. But now that it looks like it definitely is coming up to the zero line here. And so red columns, this represents U.S. recessions. And guys, I can go further back on this. I've showed this before on the show. Last week, I showed you guys this, that we have recessions after we come out of this, okay? So since the central bank tends to ease policy, the economy hits a snag. Some say such uninverting often signals that a recession is imminent. Currently, interest rate swaps show traders are pricing in over a percentage point of Fed rate cuts for the rest of this year. So that would be 25, 25, 25, 25, or however they decide to do it. But if it's 50, I think is going to trigger more of a sell-off than a 25 basis points, in my opinion. So how many yield curves have there been? You can calculate a curve between any two bonds issued, but U.S. Treasury, for instance, issues 3-month bonds and 30-year bonds. But they also consider the predictions embedded in futures contracts on similar bonds. So, but typically when you look at this inversion, when people say the yield bonds have inverted, and that is a bad economic sign, that is economic inflation is coming up, right? Which we saw in the, you can come back here and see that happened back here in 2022, right? That was when we started getting those high interest inflation rates. That is when we uninverted, or that is when we inverted, I should say. But what does the difference of the curves mean? It really means that divergences can reflect the way that different tenors capture different stages of the monetary policy cycle for the Fed, okay? Of course, it's worth remembering that all yield curves reflect market speculation. In the words of Fed researchers, investors inferring the likelihood of a recession by looking at the yield curve is akin to market participants looking at themselves in a mirror. So there you go. There is how that plays out. I just wanted to show you guys, like, this is happening. This is coming on. We are getting this. Now, before we jump into this, let's jump over to the Duo Cam. I want to check out the chat, see what people are saying. Plate the Great in here. What's up, alumni? What is up to you, bro? He said, just finished taking the kids on a little 5-minute bike ride. Beautiful weather in the Midwest today. Yes, that is good. Chicken corgi, Northern Korean corgi chicken. Good Lord. I'll leave that comment alone. I spent some time in Korea. I may or may not have tried Kegogi. If you don't know, you don't know, and you don't need to. Let's go and see what else here. Music's good. Cool. Chat is caught up. All right. Shout out to Trade Intuition, Alexander G, Hart, C90. Man, I love all you guys. Caffeinated Crypto, Falco's in here, Indie Rock, Yeet, Corp. Love seeing everybody in here. Thanks for joining us. Lunar Beaches. I'm going to be talking about some Elliott Wave stuff here in a minute there, Lunar Beaches. Somebody else's chart, not mine, just so you know. Let's continue on and see what we're seeing here on these charts, though. Yeah, right there. I got to remember what these new buttons are. I got new buttons, man. So, guys, when we see, and I'm going to go ahead and drop my camera here for a second. When we see... Oh, I am muted. I was totally muted. Sorry about that. Good Lord. Zach, you got to speak up, man. If I was muted, nobody could hear you. Yell it out. Cryptocurrencies here, options, penny stocks, futures, leverage trading, NFTs, and collectibles, right? That is your high risk, high growth, speculative stuff here, guys. Bitcoin and Ethereum, they put it here in between the high speculative growth and medium risk long-term gains. I think that Ethereum should not be sitting right next to Bitcoin on this, but that's what they have it there. That it sits somewhere between that medium and high risk, adequate for long-term holding, okay? This is where, when you make money here, you trickle it down the pyramid, right? So looking at the second ones here for the medium term, you got your blue chip stocks, your stock ETFs, index funds, mutual funds, REITs, and property market, right? And then lower risk, guys, this is your protection stage. Goes into savings accounts, money market funds, treasury bills, right there, and certificates of deposit, corporate bonds, stuff like that. Guys, we've been seeing here, the people made a lot of profit. They made a whole lot of money. And so it's trickling down now into that pyramid, trickling down it. Looking at, ETFs and your index funds and stuff like that. Some of those still have some growth going on, or at least stabilizing at current levels. But on the protection side, treasury bills, we've seen this heavy. If you go down here to my economy tab, let's go find that. Economy tab, where are you? There we go. Looking here, guys, this is the 10-year treasury. Okay, it's in the red. You see it coming down. You can see the 2-year coming down sharply. Even the 1 month, big drops. 3 month, big drops, right? Guys, these are 1 month. These are people holding into treasury bonds for 1 month. And look at the drop on that thing. That is people dumping into it. Going back to that chart that I just showed you, that's people protecting their money. Yeah, what you got for me, ZTS? I turned off my camera on that other scene so that I could have it. You can see this chart. I'm going back and forth, bro. Yeah. Back to here. So you're seeing this protection here, money moving into these treasury bills. What are you supposed to do? Make your money here. High risk, medium risk, you trickle it down the pyramid. We're seeing that a lot right now. So the overall sentiment in the market is very bearish, and it's because of data that I just showed you. Things like this yield curve. Why should it matter? Why should you care? This is stuff that's going on that typically have led to market sell-off and recessions, right? So that is what we're seeing there. And I can go ahead and bring my camera back up here. There we go. So that is that. Treasury bonds, absolutely. When they drop down like this, guys, this means people are buying them up. People are buying, started buying here, and they're buying the crap out of them. That's why the interest rate's dropping down, because they don't have to entice buyers to buy these back up. If this was going up, the interest rate, they have to offer more of an interest number in order to entice people to buy, right? You go back here when we were really bad. Of course, I'm back here in the daily, but let's go back here and look in time. Like back here when 2023 April, that's when we were hitting some majorly high numbers there on inflation, right? Back here, as inflation was going high, people went into treasury bond yields as the rate hikes started coming in to protect their money there. Okay, they were selling them off, I should say. Now they're coming back into them, because now they are seeing that the economy is getting straight. They want to protect their wealth. They're going into treasury bonds, okay? And that's just a 1 month. We look at this 2 and 10-year inversion rate. Where is that at? Right there. This is your 10-year, 2-year. You can see that this is starting to invert now here. Started back in June of this year. So that is where we really got that spike up for that inversion to get back to normal. Bring this in. That's that line right there, guys, that we're breaking above that you saw on that other chart. So there we go. Let me get a drink here. I got some tea. Let me drink some tea over here. Okay. So other news that I want to go over coming up this week. Wells Fargo housing market. Okay. Is it an early spring or a long winter? Because we just talked about people like to move into the property market, right? Well, we're actually seeing that they're skipping that a lot right now. And I will talk about some of the reasons that I think that is happening. It's not all because of, people fearing the recession and stuff. a lot of it is also because of the fact that we do have rate cuts coming. So I think people are waiting to start buying into that. For now, they're looking at their short-term bonds that we just showed you, like the 1 month. As the FOMC eases monetary policy, mortgage rates could further decline off of the highs that experienced in 2023. What's more, 2024 opens with a considerable improvement in supply, right? Inventory is still low, but if we get down here and start looking at some of these existing home sales, look how much of a drop they are. They're back down here in like 2010, 2008 time period when we had the housing crash, okay? So that's what we're looking at for existing home sales. Nobody's buying right now because the mortgage rates are too high, and people that have houses are not looking to sell their homes because they're locked in. They're locked in right now on a big one. Why did Quant pump? We'll check that out here in a minute, Juan. Let me get through all this data. I got a lot of data to go through to set people up for the week. Looking here, though, on the forecast for the federal fund versus the mortgage rate, you can see as the Fed funds rate comes down, they're predicting that the mortgage rate is going to come down also. It's currently right now at 6.8 according to this. They're projecting downside movement. Mortgage applications, though, have dropped dramatically, and they're starting to come back up right now because people are getting that hopium. They've been waiting for a long time to buy a house. Now they're seeing that this is because it's down a bunch. That's probably true, Crux. They're looking at this and going, okay, well, if the rate cuts are coming, I've been waiting for a while to buy. Let me go ahead and start putting in my application, see if, what my approval level is, stuff like that. Affordability still not coming into line yet for most people. National home price to income ratio. You can see that we did have a small pullback here on it, but now it is starting to come back up again, creating a higher low. So the mortgage home price to the national income ratio still not in line. And then over here, the Fannie Mae home price expectations, the most optimistic one here has an increase of 33.8 going into 2028. Okay, panel wide average. This is like the general version, the general in the middle segment of the population. Our analyst is coming in at 20.8, and then the most pessimistic is seeing a slowdown here. Mind you, it's 8.1, but it's still a slowdown on the average increase of home values year over year compared to what we normally see. So the big one is a soft landing, and you guys are going to hear me talk about this a lot. The soft landing, guys, this is everything on my narrative. It has to be a soft landing or everything changes. This will support strong underlying housing demand. If the soft landing happens, people are not going to be scared. They are going to be willing to get into a 30-year mortgage. So they're going to be willing to buy those houses, okay? The existing home inventories, though, are still low. But I do believe that as people start to sell their older homes to buy newer homes, it will open up the market with all of the houses that nobody has been selling because they were locked in at 3% or lower interest rates on their loans. So that could happen there as the markets start to unlock some of those mortgage rates. Supply is on the rise, but far from flying high. Strong underlying demand is one reason behind that shallow pool of available homes. And these people, they're going to be looking to refi. Let me jump over here. You guys want to know something that I think is going to absolutely pump going into next year? It's going to be bank stocks. And I'll tell you why. Because they're going to be able to borrow money for cheaper, which means that their earnings are going to be higher because it costs them less money to get liquidity. And then also on top of that, you're going to have people that are refining their homes to get lower rates. You're going to have people that are buying homes. I would say banks are going to be the big mover next year in the stock market. Not financial advice, just something that I am aggregating the data and going, if I had to say what's going to really move next year, banks are for sure going to move. Most outstanding mortgages have a rate. Yeah, we'll get into that later. Let's move over.
Hold on, let me give a shout out to my boy French Toaster. What up, French? How you doing?
Yeah, Zach. People have ZTSD. They miss ZTS around, so I got a lot of holler at his peeps. Warren Buffett just dumped tons of Bank of America. Yeah, I think that because he sees that we do have a most likely a recession or recession-esque environment coming. But next year, I'm talking next year, I do believe bank stocks are going to be the ones to watch. So did I miss anybody else in here? Buck, I'm guessing a lot of the 10-year buys and people who have money set to auto invest in their retirement account. It just pushes money to every. Yep, that's the thing. Okay. All right, let's continue on here. Let's looking at this other data because I'm almost done, and then we'll get into it. The other stuff here. All right, this is from eHack. Meet Kevin, guys. I told you guys you can go to ehack.com, see all of his notes. He's got really good stuff here. He had this section here, and I had to go back and look at it, but it was from TS Lombard, and I went and looked for that article, and so I found it here. It was under Seeking Alpha. Again, one of those things that I pay for, so you guys don't have to. But keeping cuts at 25 will be a mistake by the Fed. You guys just heard me say we got to have a soft landing. We need that 25 basis points. Should I explain that one to you a little better? I probably should. Let's talk about that first. So soft landing, 25 basis points this coming month in September, and then 25 basis points carried out throughout the year. That would be one full basis, 100 points, right? So that would be 1% drop in the rate. So that would put us at like 4.5, right? If they do it too quickly, if it's too fast, if they do 50 basis points, it's going to scare the investment world. They're going to run and hide, right? So they're thinking they need to do 25. That says, hey, this is a natural, gradual landing of the economy back to normal here, right? No worries, no stress. We got control of this aircraft, plenty of gas, right? If they have to drop it too fast, like, hey, are they running out of gas? What's going on here? Why are we dropping this quick, right? So this article with LS Lombard, he's actually talking about that keeping the cuts at 25 basis points will be a mistake. So when we get in here and we look at what he's saying, where did my camera go? Good Lord, I lost my camera. I thought that happened over there. Let's come over here. We'll just put it to the front. We'll go front cam. There we go. No worries. I got more cameras. August employment data should not keep the Fed Reserve cutting 25 basis points. Okay. Ongoing resilience in consumer spending, buoyed by the rising income, underpinned by an overhang of liquidity that will prove inflationary once the short end of the yield curve swings. That's that 210 that I showed you. Once it swings positive, for the record, I think they should cut 50. That's what he says. The latest ISM New Orders Index implies that negative equipment spending in GDP for the beginning of the third quarter. But Blitz said his own real yield curve inversion measure indicated a recession coming in the fourth quarter. He thinks that there's a recession coming in the October, November, December time period, okay? He said that when looking at private payrolls for the past 12 months, it's now worse than in 2019. But better than 2007 when we had the housing market crash. About the same as what we had in 2000. Blitz said that the forward Fed funds are not pricing in a recession, but depend on the Fed's easing to become more aggressive after the first cut, meaning that they'll do 25 and then go 50 or something like that. The markets are not pricing in a recession either. Rather, they are pricing a run of good fortune. With the expected Fed cuts, the economy growth and inflation is stable at 2% by mid-2025. That is what they are thinking. He said, however, that the recession or a bounce with more inflation is the likely scenario. Let's come back over here and talk about that, because what he's indicating here is that we either have a recession or they don't cut quick enough, inflation comes back, and then they have to really shake things up because oh crap, inflation bounced back up. We just cut 25. Do we pause? Do we extend this out? Do we scare the markets, or do we even possibly have to raise the rates again? And that is what Blitz is talking about here. Coming back over to this, the August data are not recessionary by themselves. The data that we just got this last month, the job data, they're not recessionary by themselves. But the anecdotal evidence cited in the Beige Book is precursor to recession, and the Fed has learned to take anecdotal evidence seriously around inflection points. On the other hand, the index of aggregate payrolls continues to rise. Incomes are now growing ahead of inflation. There's still a large overhang of liquidity. Caution will roll at the Fed. It usually does. They cut 25, wait and see. I believe it's going to be a mistake. And that right there, guys, that's making this rate cut coming up probably one of the most important rate cuts meetings that we've had yet in this entire session since 2000 pandemic. Because if they don't do this, if they have to do something. We're seeing the labor market get hurt by it. But if they cut too quickly, it will upset the markets. And if they cut too slowly, then it could cause inflation to come back and then upset the markets. He's saying that either way, there's going to be an upset to the markets, but that 25 basis points would be worse because the return of inflation means nothing we've done for the past few years has worked, and we wrecked the labor market for no reason, right? With no benefit, no perks to it. I want to come over here and talk about some stuff that I'm seeing on the Fed, on Fred. This is from the Fred economic data. You guys, I already showed you guys this one. We'll get rid of that. Let's go over here and let's talk about personal savings rates, because all of this stuff coming in, people losing jobs. Actually, I want to show you this one first. We're going to go here. We're going to talk about this. There we go. Let's talk about this first, and we'll talk about these jobs. Big one here, delinquency rate. That is not it. Personal savings. Yeah, we'll go here. And I want to put in construction. Construction. I need jobs on construction. There it is. Job openings, construction. Guys, this is a good indicator of the economy right now, because this is jobs openings for construction. And you can see here, we're looking at 2022 to 2024. Let's just go back here. We'll bring this into focus, and we'll just look at what's happened here. You guys can see that we did have this economic growth, right? Can you go back for me? Thanks. We did have this little economic growth going back in here to 2023, go back into 2022, where we were having this period. Yeah, here we go. 2020, you can see this was the economic crash. There's a recession, right? Recessionary data, I should say. We come in, this was the low period. We come in and the economy's growing. We're growing. Things are getting better. It's getting better all the time, right? Hey guys, Bidenomics is working, blah, 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 right? That's what's happening here. Look at this period here, starting in February of this year. Construction jobs just dropping like a rock. I will tell you, construction jobs disappearing like that typically indicate that manufacturing and building is slowing down. That is an economic contraction. That is, the economy is shrinking, not growing at this point now, right? Started this year. Go over here and look at private total jobs, starting right here, February 2022. It's been dropping ever since. We already know that a lot of these job numbers have had revision after revision after revision, almost 818,000 jobs revised out of existence. And that's what we're seeing here. So that's one indicator. And then when we go, okay, so people are losing their job. Let's go here and say people are losing their jobs, but they can rely on, making it. They'll make it through. If it's short, they'll make it through. Everything will be fine. Everything will be just fine. Bidenomics will save us all. Guys, let's go over here. Even my son's shaking his head. Let's go take a look at what's going on here with delinquency rate on credit cards right now. It's starting to rise back up, has been since 2021. So more people are late. Actually, if you look at the data here, that is quarter 2, 2024. That's a massive jump there. That's a massive jump. All right, let's go over here. Let's look at delinquency rate on consumer loans. Since 2021, it's going higher. Okay. Let's go to here. Let's look at personal savings. How's that looking? Oh man, it is at the low of 2022, and it is back at the low of 2007, right as we went into the housing market crash and had a recession, guys. So people don't have money. Their savings is at a record low here again, or at least in tie with record lows. We have delinquency out the wazoo on everybody's stuff, whether it be personal loans, whether it be credit cards. So they don't really have a lot of credit that they can rely on to carry them through a bad situation. It really is just a stack of dominoes that one push could send all of this just on a collapsing level. So I wanted to point that out. And then let me see if there's anything else over here that I had in all of this stuff. No, I don't think so. Oh yeah, he did do updated his list of recession indicators. Somroll, we've talked about this before on the show. Roll, it's over, if it's over 50, right? It's actually at 0.57 right now. It was triggered with the July payrolls, and then it got reiterated on the 3-month average of the August payroll. So this absolutely in effect recession indicator. 2 to 10 on inversion, now at 6 basis points up to the upside. So it's inverted now officially at 6 basis points. That is one. Decline in real private domestic investment, growth to negative. So GDP, some of those factors were not great. There was negative growth on it. Peaking of unemployment following a peak in private. I just showed you guys jobs. A lot of that stuff is dropping. Personal savings rate, it's way down. Delinquency rate on credit, consumer loans, credit card loans. Construction spending month over month. Obviously, if there's had the job numbers that I just showed you for construction, then this is a massive indicator. So when I talk to you guys about this data, I hate sounding like the Uber bear, man. I really do. But there's tons of data. It's not like I'm cherry picking onesie twosie things. We have massive amounts of data that are showing us how bad it really is. Matter of fact, if I jump over here and look at my X here, X marks the spot. I've got some, I do have some hopium data in here for you guys. I promise. There's some hopium coming. It's coming, man. Brace for further deterioration in the U.S. labor market. Housing permits, less completions fell to the lowest level. Sir, come on. To the lowest level. That is not the one that I was just on. There we go. To the lowest level since the great financial crisis, okay? This metric is a leading indicator for U.S. construction jobs, suggesting payrolls will soon sharply decline. And you guys can see here with this period that they're talking about, just massive dump starting back here about 2022, okay? So this is construction job cuts. It's the leading indicator to housing collapse, which is another indicator of contracting economy, right? So there's that one, and then I think that was about it. No, there was a couple more for employment. I'm sorry, my apologies. This is insane. Full-time employment dropped by 1 million workers in August on a year-over-year basis, marking the 7th consecutive monthly decline. So for 7 months in a row, we've had full-time employment dropping. Since 2023 in June, full-time job count in the U.S. has fallen by a whopping 1.5 million jobs. And if we go here, meanwhile, the part-time employment rose by 1 million year over year. Additionally, the number of permanent job losers jumped by 324,000 year over year to 2.5 million, the highest since November 2021. This was the 16th straight month of part-time job gains. At the same time that we had 7 months of full-time job loss. So you guys, we got these job numbers that roll in. They keep revising them, but the job numbers they're paper mache. They're not even stone. These are like, hey, look, there's 3 part-time jobs, so that counts as 1 full-time job. Look, we're up, right? No, the numbers the audio don't match the video, as we talk about all the time on here. And then there was one last one here. This one was interesting. I just want to show you guys this. Please don't throw me off of YouTube, Google. I'm just pointing out someone else's data here. Over the last year, the U.S. economy added 1.4 million foreign-born workers in America. Jeez, Louise, would you stop doing that? In America, and lost 768,000 native-born workers. So you can see here, Meet Kevin put this out. Foreign-born workers, 16 years and over, civilian labor force. This number here is up 1.4 million in the civilian labor force overall. And native born 16 years and over for civilian labor force down 768,000. So keep in mind, just because they're showing all these jobs being added does not mean that those jobs are necessarily solving the American people's problems. A lot of these jobs are being taken on by foreign workers. I'm all for immigration. I live in an 86% Hispanic city. I love it, El Paso. I love it. I love the environment, the atmosphere, the culture. It's amazing. But we've got millions of workers that have come across the border illegally that are now possibly taking up a lot of the jobs that are being offered out. And that is what that data right there says. I don't know if that's all true or not, but that data, according to Meet Kevin, that's where a lot of those jobs have gone. So is that really doing anything for the U.S. economy overall on keeping things from being, houses from being mortgaged or foreclosed on, for loans being defaulted on? Don't forget, when those companies start getting defaulted loans and start getting, we're not getting any payment on this credit card anymore, you got to take that into account also. So good Lord, let's jump back over here. I just ran through a whole ton of data before I give all the hopium news out. But guys, let me know your thoughts in the chat. What is this? What do you guys think about this? Are we going to get 25 or are we going to get 50 this week? How do you feel about this job numbers? I mean, because have they been bad? Have they been horrible? How about that? They haven't been horrible, but they're not good. And now we're seeing that they may not even be anywhere in the world in the realm of reality to top it off, because they're not all they're part-time jobs, right? There's 3-to-1 part-time jobs making up a full-time job. Although I would be interested to know, ZTS, Zach, let me know what is it like, because you're out there, you're in the fiat mining world. How is it with turnover at work where you're at and stuff like that? Like, are you guys still hiring? Do you have enough workers? Can you get enough workers? Or what's it like in your?
Well, where I work currently, we have a pretty decent sized staff now, especially because what we're providing, the services we're providing, has gotten increased demand, right? Especially with people reselling it over across the border. They're coming over, purchasing and taking it over, right? Excluding all that, we have a decently sized staff. The only problem is they're all high school teenagers that are working like their first job ever. So outside of that, like, it's pretty well staffed. We get the job done. Not really too much I can say about that.
So how many hours do you work a week?
I work between the full-time hours, so that'd be like 35 hours at the minimum, 40 hours at the maximum, and then if I have the chance, I'll take overtime.
And how often do you get overtime?
Just did overtime last night.
Awesome. Could you afford to go out and get a 1-bedroom apartment and live on your own right now?
Absolutely not.
So that's the type of jobs that they're talking about, guys. Like, he works for a pretty big company. There's no way that he could live on his own right now. So, if he did, he would be these people that are default on credit cards and living on loans and not able to pay that stuff off. So there you go. That would be that would be what we're heading towards. This is the strength of mainstream economy right here in ZTS when we talk about what could possibly be coming. So now, would you guys like some hopium? I'm gonna go look at Quant, because if you're still in here, the guy that asked for Quant, I can't see who it is, but if you're still in here, it's Juan Flores. Juan Flores, if you're still wanting Quant, let me know if you're still here, and I will get that up for you and show you that. And then we'll go and take a look at what we had. Yeah, you got to get creative. That's a fact, Buck. We'll take a look at the hopium. We're going to look at the hopium. Actually, I'm going to give you a little bit of hopium first while we're waiting for him. Let's bring this up here and talk about this. Charts, please. There we go. All right, so this is, again, from Titan of Crypto. New sub, welcome. We appreciate you, Drilla69. That's what I'm talking about. Welcome to the alumni. We're glad to have you here. I love it. Actually, you get a boom shakalaka. Juan Flores is here. Cool. I'm going to talk about this one, and then I'm going to go take a look at Quant for you. I got you, bro. All right, let's jump in here. Let's take a look at this Titan of Crypto. I show you guys this stuff all the time. He's got this layout here on 4-year cycles, and you can see the red lines. That is a ceiling of cycle 1, or phase 1, phase 2 of a cycle. And then we go into phase 4 before we hit a new phase 1. Okay. The key thing is that we typically, these are yearly candles. Okay. We typically come back in. You're from Investing Bros. Welcome. Glad to have you here, man. Glad to have the bros here. You typically come back and test that ceiling. It is a bounce off of it. It'll come back in and then come up from there, right? We go into the next phase, phase one and phase two typically have, these are actual candles. So this is solid data here. So they sit there solid. We retested here last cycle, came back above it. At some point here, this retested this as support and then it continued up. Here's our current cycle. We have a solid current cycle here that you can see in phase three. We even rejected a wick off of it. Very solid ceiling. That level, guys, is coming in right now. And we'll go over to the chart and take a look at it just to give you an idea of what that is looking like when we put this on a yearly. And then we will look at 12 months. There we go. Let's go in and see what that level is actually coming in at. Let me get rid of all of my drawings here. Fib channels, go away. Thank you very much. That level currently, well, I'll just do a line first. Let's do that. I'll put a line on. I got a magnet turned on here. And let's move that right to the top. There you go. That is coming in at 48,200, okay? That is the level that we have to hold on price. If we break below this and cannot get back above it, this is another indication of more downside movement. Why? Because like I just showed you on that thing, we have to stay above this in order to keep the same cycle run. I want to remind you guys that we have never had a Bitcoin cycle take place when the economy is contracting. It's always been a growth economy. So with that in mind, even in 2020, we had a pandemic. The halving happened in early 2020. We had the V-shaped recovery, all of the flood of money to help grow the economy. So even in 2020, we had a growth environment from the economy. If we've got to hold above that level there at 48,223, or we are looking at downside movement there. I just wanted to bring that up and show that. And I think that pretty much wraps out what I was looking at. Let me get everything turned on back here because I won't remember to do it later. There we go. Weekly chart. Thank you very much. There we go. We're back. Now, sorry about the congestion, guys. It's been dusty here. I just did a drive yesterday all the way to Tucson to pick up my wife's wedding band because we had to have that fixed. So good to go. I'm drinking my tea. I'm spot of tea. I also have a ba'awa'a. So there you go. Shout out to my Brits. Drinking tea with the ba'awa'a. Look at here what I'm seeing also here on the X, and I'm going to get to quant then right after this. There was that one. This is your hopium. No, we're going to come back and do hopium. You guys can wait for some hopium. Let's go look at quant.
Whoa.
Zach's over here like, man, Dad just flipped this thing hard. Let's go over here. Let's look at quant. Where's my quant chart at? QNT. There it is. Let's put that on. Let's come over to the 4 hour. Yeah, good rally there on it. Good rally on it. Let's go in here and see what we're seeing. Okay, let's go. I'm going to put this on because I don't like all the noise. Let's go to a daily, and I'm going to show you something here. As of right now, despite all of this, man, we've even lost my fibs back here. 50% rejection. You guys know how I always tell you, if we get a rejection on the 50 from underneath, that is a very, very bearish move. That's what happened there. I'm going to go in and pull some new fibs on this. We're going to isolate this chart off. I'll do new fibs and we'll get this cleaned up. And we'll do a fresh run for you. But I'm seeing something on the chart that I don't like, and I'll tell you that now. I'm going to go here, grab my fibs. Platinum pocket. Yeah, lock your fibs. Lock your fibs. There we go. So we can see here, platinum pocket is what we're looking at here. This has been our level of support. We pulled back up into it. Okay, so that's good. But what I want to show you is that we have the series of lower highs continuing. You can see a double top there on the 786. These are lower highs. We did have a little one here. If this candle here is not able to get higher than that candle there, do you know what we have? That would be the setup there of a head and shoulders pattern. If it comes back down and we get that, that would be a good thing. That would be one thing to watch for, especially if we come down and bounce here on the 887. But what I'm seeing right now, unless this candle today can get, or I guess the next couple of days, can get back above this, you're still looking at a series of lower highs. So the bounce on that is literally just people flushing in, trying to hope that they can catch that bottom piece here. I'm going to look at higher time frames and look at the oscillators in a second. Let me get rid of all the brush marks there. So as of right now, yes, you got a pump today. Not sure what it could have came from. I don't have any of my news on. Let's see if there's any news that came out on it. Events, news notifications, economic events, ideas, no ideas. Key facts today. All right, so we got a little bit of news stuff down here. Hide that event. Yeah, there's no news on it. Dude, that's just a retail rally coming in for a flush up. But when I look over here, you can see even though that came up, that big candle there, money flow is still coming down. All the oscillators are still coming to the downside. I mean, you do have the V shape right here on the oscillator ribbon, but it hasn't turned peach yet. That will indicate that it's still got more upside coming. So as of right now, this oscillator is still looking bearish. We got rejected perfectly on the 50 on the RSI prime. So this is RSI turned into candles. I would say that this is probably coming right back down unless Bitcoin gets a move up. No hard telling why. Probably just somebody going, look, we're back down here at this key level. We double bottom here. Let's get that and see if we can make it move. But retail ain't back and nobody's risk on. So if you're in profit on this one, oh, you're staking on it. You're staking on it. What do you got, ZTS? What's up?
Don't mind me. I'm just stretching.
That's an indicator, man. Stop. He's over here like arm up like this. I'm like, do you need something? Yeah, if you're staking this, Juan, if you're staking this, then you should be good. I mean, just you're obviously not going to be able to get out of it quickly. But if you're not staking this and you're trading it, then you should probably take some profits, because until we get above that level there, this is a very bearish pattern still going on here. Matter of fact, one of the things you can do, come over here, grab a regression trend, drop it on here, pull it over, and you can look at that. If this candle daily close cannot hold above this and retest it for a bullish move to the upside, then it's not going to continue on. So that's a regression trend tool. It's right here, regression trend. You just put it on where you want it at and pull it down. Matter of fact, if I grab it and put it more like in here, let's see. Yeah, it's still right above it. So there you go. That's one thing that I would do on that. Just watch that and see how it plays out. But right now, it's not getting any higher than this level, which means it hasn't changed trend. Money flow is still going to the downside.
Yeah, he said CEO came out about staking.
CEO came out. Okay, well that's the reason for it. That is those are those little micro moments that bring in liquidity and get people hyped up about it. But you got to remember, most people are just looking at that project and that project only. I'm coming over here. Coming back to Duo Cam. I got to rant for a second.
Wait, hold on. Didn't realize Indie Rock Crypto was into the UTEP miners. That's cool. And then obviously you have to say what's up to Mark Dutch, because he's got severe ZTSD.
Facts, big facts. Okay, I'm ranting here. Here we go. I keep seeing on X people talking about this project's about to pump, that project's about to pump. Bottom line is, until the economy shows a trend and it's about to pump, until there's a trend reversal in the economy, a trend reversal on how many people are going risk off versus risk on, these pumps are small, they're minor. If you're trading them, great. Trade Intuition, Alexo Crypto, people within our community, crushing it on trades. I'm in a trade right now on Bitcoin. It's doing great for me. I'm shorting it, by the way. Called it out in our trade in our TA 101 last Thursday. But nothing's going to continue to, like, you're not going to get this isolated project that just goes against everything that the economy is screaming at you right now. It's not going to happen long term. Matter of fact, one of the guys I was listening to earlier, Lark Davis, said, look, here's the bottom line. If we get a soft landing, we still have to get through the rest of, and Andy Rock just said it, the yen carry trade. That was, which is not done unwinding, by the way, and they're talking about raising rates in Japan again. We still have to get past that. We still have to get past the uninverting that's always led to a recession. If this is the first time in history that we don't get a recession following the 2 and 10 year uninverting, then sure, great. But until that happens, the only thing he feels comfortable being in right now is Bitcoin. He said because altcoins, if you're in profit on them, you should probably take your profit because they drop 80 to 99%, and he doesn't want to see anybody sitting 99% in the hole and riding it all the way up and all the way back down. And he said the data right now, hands down, has to play out in order for the markets to reverse. Anything between now and then, which I said on August 1st, right here on Piper Academy on the morning market report, anything that we get for a rally starting in August or September is a sucker's rally. Do not get trapped. And so I just want to put that out there. Jesus. Okay.
Did you see Retro Mike?
I'm throwing this up on the screen. Retro Mike, they are bigger than the economy. They posted it on the internet. It has to be true. Yeah, nothing's bigger than the economy. But Sir Piper, Cass, Fangirl say they are going to flip Bitcoin by the end of the year. I have no Caspa anymore. I started buying it at 3 cents. I sold my Caspa. It is sitting in Bitcoin on my Tangent cold storage wallet. So there you go. Retro Mike, you won, but it wasn't because of what you said. It was strictly based on the economic data. I'm protecting my wealth at this point. I just want to clarify, not because of you. All right, let's go over and take a look. Hey, CJ Taylor, what's up? That's my bro, Clyde, in the house over there in Florida, watching me this morning as I'm over here dropping all this bad news. Okay, I got good news, though. Let's go into good news. Here's your good news, guys. We're going to look here first. Rect Capital doing a great job of handing out some hopium. Bitcoin is in a halving year, so it makes the most sense to compare 2024 with previous halving years. I agree. In the previous halving years, 2016 and 2020, Bitcoin enjoyed 3 straight months of upside across October, November, December. 2016, right here, 14.7%, 5.4%, 30.8%. That's all upside. Didn't have any downside at all in September, but we did in August, and that matches up pretty good with this. We just had an 8.6% retracement in August, okay? Let's go to 2020. 27.7% in October, 42.9% in November, and then 46.9% in December, all in 2020. Amazing 3 months there, following a 7.51% in September. Of course, that was a green August, right? I have to say, seeing what I'm seeing on here, because I called that we were going to have, because we had the month that we had in July, I said August, September, guys, majority of them in the negative. I think we're going to have a red August. I definitely think we're going to have a red September. That's what I said on August 1st on this live stream. So you can go back and watch it. There's shows about it, okay? But what I will point out is that we have a downside already of 7.93% for September, and we're 1 week in, okay? Typically gets even worse the second and third week, okay? So there's one. Secondly, we've never had, and too many people keep leaving this out. Again, Bitcoin halving year, we have to compare it to halving years. We've never had a halving event in a contracting economy. I can't say that any more clear for people. Everyone wants to keep talking about the previous cycles. Great. They've all been positive growth economies, all of them. You have never seen this Bitcoin, no matter what you think, period. And if you are not taking all this data into account when you're looking at your charts and when you're looking at your projects, when you're looking at your profit taking, then you are cutting yourself out of information. We call those intel gaps in the military intelligence world, and intel gaps get people killed. In this situation, intel gaps wreck your portfolio. So guys, you've got to be protecting your wealth right now. Not financial advice, but listen, if you've got things that are in high risk and you're in profit, it doesn't hurt to move some of it over to Bitcoin and protect it. You don't have to be at the very tops and bottoms. You only got to get the big juicy gains out of the middle, okay? So if this does turn around, we do see this turnaround here, this October and November stuff starts to happen, you can always go back in on your other stuff. But if you were wrong and it does not happen, you are going to ride your stuff down to zero, and you will be another one of those people saying my portfolio is down 99%. Okay, rant over on that. Jeez. Okay, here we go. This is the Elliott Wave one. No, this is not. Yes, it is. This is the Elliott Wave one here, Lunar Beaches. And this is your window of knowledge. This is your wheelhouse, but I'm going to talk about it. Milky Crypto said Bitcoin is in its final expansion. Now, I want you guys to keep in mind that Wave 4, even though it's in this channel here, does not have to stay in the channel. Wave 4 can come all the way down to, as long as it's higher, as long as it is higher than its Wave 1, and that it doesn't extend. I can't remember. I think it cannot be longer than Wave 3. So this third leg here, it cannot be longer than that to the downside. Okay, that's the rule, if I remember correctly on here. Lunar Beaches will probably come and smack my hand and tell me I screwed it all up. But the way I understand it, it cannot be longer. You cannot have any leg longer than your leg 3. Okay, which would mean that this could still come all the way back down into the $45,000 range and still be leg 4. The upside movement on this, guys, between the 1.618 and the 2.618 is somewhere between $88,000 up to, $140,000. Okay, doesn't mean that we can't still have some recessionary kickoff that brings down Bitcoin to those lower levels there. Okay, so 43,000, 44,000. I'll show you why I think that is where I'm watching, and that's where I will be starting to wade back into the waters. I just want you guys to understand that Wave 5 can come down to that $43,000 level and still be a structure for a 5-wave structure there on that. Retro Beast, do you rate the Pi cycle? How do I rate the Pi cycle top indicator? I talked about that as another piece of hopium this week. It has not crossed, and that's always indicated the top. But anytime you say always, you have to look at the environment of when that happened. That's always happened. Let's say it this way. That has always been a top indicator when it crosses in a positive growth environment for the economy. Will that be the same in a non-growth economy? I do not know. But yes, I did bring that up this week. That was another piece of hopium. Pi cycle has not crossed yet. And then this is your last piece here. I have no more hopium to give. I'm out of hope. Wrecked capital most of the time through 2024, with perhaps 2 exceptions. Bitcoin sell side volume needed to be large enough, meaning the sell volume had to be enough people selling to enter the orange box in order to reach seller exhaustion levels, and in turn kickstart a price reversal to the upside. So let's go down here and look at this. You can see down here at the bottom, and let me bring this in like that. There we go. I can bring it in like that. Perfect. Let's go in here and look at this box that he's talking about. Can you truncate for me? Can you do that? There we go. All right, so let's go down here and take a look at what he's seeing here on this chart. Man, X, we're gonna fight, X, me and you, because you do not like to work for me at all. There we go. Perfect. Okay, so what I'm seeing here on this chart, oh my God. Okay. I'm going to have to fight here for a second. Give me 1 second to fix something here. And then I will show you what I'm trying to show you on this stinking chart. Let's refresh. Oh, now you connected. Thank you. Now it's connected.
You having technical difficulties over there?
I was. My mouse pad, my touch pad was not wanting to zoom in and out. So, okay. I got too many things open here, I think. Let me refresh that. There we go. Oh, I see what's happening. It's on a wire. Wow. I just had a whole thing pop up here. Whew. Good Lord. Okay, I'm going to have to close this out and I'll bring it back up for you. Bear with me, folks. Enjoy the music. At least I got music for you while my mouse pad does not want to zoom in on this chart. Oh, it's X. X just doesn't want to play.
I mean, DMX joke insert right here.
I know what I'll do. Let me go to bookmarks. I'm going to go down here. I'm going to open this up. And then I'm going to save it to downloads, and then I'll open it that way. That way I can bring it in and show you what it's saying.
Loopholes with Army Piper.
That's right, man. That's right. Downloads. There we go. Now we got it, folks. Now we got it. Now let's take a look at this and see what I'm seeing here, because at the bottom of this chart here, guys, there's this orange box. Sorry about that. My apologies, guys. You can see that each time that we've come into this having into these this orange box range here, the red candles are selling volume. It's people selling off, okay? And each time that we've had that big sell volume, that's indicated the bottom. It's gone into it. That was a bottom. Went into it here. That was a bottom right there. Came up. Every time that the sell volume has been heavy in here, we have gotten a bounce. We just touched it here, and it actually went down even lower, but did not break into it. And currently, right now, we are seeing that that is a low green box. There's still more downside coming on this chart, according to this. But if we get that to push up in here on the sell volume of that orange box, guys, and if you guys want to put this on your chart, let's go over here. I'll show you how to do it. All we're going to do, go in here. We're going to put in volume. It's going to be standard volume here. And let me go to Bitcoin. Let me go make sure that I've got the right time frame on that. He's looking at daily on Bitcoin. Perfect. Okay. We got that on there. Let's take all that up. And then we're going to bring in an orange box. I'm going to put one right down here. And we just touched it right there. So rectangle. Thank you. This is that box he was talking about here. Okay. And every time that we've come up into it, that has been a bottom indicator where it, okay, look, bounce. Okay, look, bounce, right? What he's talking about right here is that we got low volume again, and it's starting to come back down. That actually is a little too high. Oh, I guess it's not. It's going to move like that as I zoom in and out because it's set on auto resize. But that box that he was talking about there, I'm going to keep an eye on that on his charts because I subscribe to his stuff, and we will see how that plays out. But as of right now, that is indicating more downside still coming there. That's the bottom line on that I wanted to talk about. And then I want to go over and check our poll. Have you looked at the poll yet, Zach? How's the poll doing?
Yeah, we got a 59 to 41. 59 yes.
59 people. It is a chicken nugget. Love it.
No, 59%.
59% say chicken nugget.
37 people, yeah.
Oh, okay. There you go. I guess that's about it for today, though, guys. I wanted to let you guys know, though, that there is very, very bearish data coming. The data that we're going to get this week, guys, we got CPI. Let me go pull that up for you. So I can tell you guys that data. I got that.
Did you see Buck?
No, what'd he say? Can we get off the 80s porn music? Bow chicka bow wow. Yeah, I could get off that. If I knew how to fast. Just bear with it here. I'll mute it for you. How about that? And then I'll bring it back in a minute. Let's go over and look at the economic calendar for the week, guys, and then we'll wrap it up here. Let's go over there. There we go. Are we still on porn music? Yes, it's still on porn music. I'm sorry, man. I'm sorry.
This is just elevator music.
Yeah, it's just elevator music. Buck, chill out. Jeez. Okay. ZTS relaunched the pulse. Chuck said. All right, guys, let's go over here and take a look at what we're seeing this week on the economy data. Monday, nothing. Tuesday, nothing. Wednesday, core inflation data, guys. This is going to be our inflation rate. Right now, it's projected on consensus and forecast to come in neutral. That means no change to the inflation. Year over year, though, they're actually expecting it to be down here. 2.9 is what it currently is. They're actually looking for it to be 2.6, 2.7%. Monday morning markets will probably get a little boost off of this, maybe, because they're going to be looking at this data going, okay, let's cook this in. This is bullish, right? This means soft landing. If this data comes in and it is not in line with this, then sharp sell off on Wednesday morning once it comes out. It's going to be out at 6:30, 8:30 a.m. on the East Coast. This is 6:30 my time. Then we're going to get CPI data that's coming in right after that inflation data and core inflation data, okay? PPI, this is going to be your producer price index. This is how much it costs for producers to sell goods and make goods and get goods to make other goods, right? So PPI is going to be coming in, the producer price index. This is actually expected to be a little bit higher. If this comes in higher, that is not deflationary, that's inflation. If you look here, factory gate prices in the US, okay? That's what they're talking about there. If we come down here and we take a look, in the United States, the producer price inflation month over month for final demand measures month over month changes in the prices for commodities sold for personal consumption. So I'm going to go ahead and point out right here off the bat that we got inflation rate coming in that they're saying neutral. They're actually projecting this to be lower, but you're going to tell me that PPI could possibly be coming in higher, meaning that look, this was at 0. Even on month over month, it's up. You're telling me that PPI is going to be more expensive to buy goods from the producers, but that the inflation rate is going to be down. Video don't match the audio. So it's going to have that again, guys, where we could be getting mixed data this week and cause even more downside selling. And then, of course, coming into Friday, we get export and import prices coming in. The two big ones, though, guys, Wednesday, Thursday, and then, of course, next week on the 18th, we're going to get that FOMC and those interest rate decisions. As of right now, they are forecasted. Do you guys see that? Well, right now it's at 5.5. They're projecting 5.0. That is a 50 basis point rate cut. That is what can add right onto that uninversion and all that other data to include bad job data that keeps coming in. That's what can send us into a recession, guys. So when I tell you guys that I took a lot of profits and that I'm sitting in a very safe position, protecting my wealth, this is all the reasons why. I don't want to scare anybody. I don't mean to scare anybody. But if I did not tell you guys all this information and then I watched you guys get totally wrecked, I have failed you, I have failed the community, and I have failed what Crux and I said we were going to do from the beginning, and that was to educate people so that they did not need to make painful mistakes. And that's what we're here for. We're here for education. So I apologize if my stance on all of this scares a lot of people, but what I do is I read this data and I analyze this data and I give you guys what the so what is of it. And the so what is right now is not a bad time to protect what you got. So there you go. ZTS, you got anything for anybody on the way out? I think it's time to wrap it up. We're gonna go make some breakfast. I'm making brioche bread French toast with cinnamon and vanilla, thick cut bacon, and fried eggs. That's dinner tonight. Breakfast for dinner. So you got anything to tell these people?
I don't think so, man. I think you hit everything that was really important. Obviously, when it comes to that PPI information, like you telling me they're lying to us, who would have guessed?
Yep. It's not matching. It's not matching. So, not scared, prepared. Alexander G in the house. You are so right. You are so right. I'm gonna let you guys go though. It's Sunday. Go play some football. Spend some time with your families. I appreciate you guys joining me here on Sunday. It's not a typical show. It's very, very, chilled, laid back usually. Today, a lot of data to go through. So apologies on that, but I appreciate you guys joining us here. If it's your first time, don't forget to hit that like button, smash the hell out of that thing. I appreciate you. And then also, guys, if you would, share this out, share it with a friend, let other people get some information. We would greatly appreciate you for it. Love you much. And you guys can please share. What you got for me, GTS?
Real quick, just make sure y'all enjoy that infinite loop right there. That one right there. But yeah.
I did have one thing to say. I don't know why I forgot about this, because it's about the DCA thing. DCA works great if you're dollar cost averaging your average buy-in low. If you bought at the bottom of last market on almost every asset you carried, dollar cost averaging is raising your average price, not lowering it. I bought at the bear market bottoms on pretty much everything I had. And pretty much October 23rd, I told everybody in the community about it, what I was buying and when. That is when dollar cost averaging is when you're below that entry level, and it actually lowers how much you have in it. If you're doing it afterwards, after it's pumped, then you are raising your price, which means it's an even shorter distance to come back to you. Okay. The reason that I am not just dollar cost averaging is because I would literally be raising my price as I lost tens of thousands of dollars. So it did not make sense for me to just protect my wealth. And if the markets turn around, the most parabolic of the run is in the last 20% of it. If it's still going, I'll still catch a majority of that run. So dollar cost averaging works great if you bought in later or it's a new asset. Does not work so great when you are when you bought in at the bottom. You're just raising your average price. Your goal is to lower it. So I just wanted to get that out there. All right, guys. We appreciate you joining us here today. We will be back here next Sunday for Generation Wealth. Don't forget to smash that like button. We appreciate everyone who came here today and joined us for Gen Wealth. And, this is good. Zach gets to hear a lot of stuff. I think he learns more info on this day than any other day of the week.
Hold on. Alex, I know Caspa's down, but what is that? What is chicken nuggets greater than Caspa?
I had to get to that button. That's for Alex. DCA only works if you have it on auto buy. Yep, I agree. I have it on auto buy on some stuff, but I've shut that off for now. So, all right, guys, I'll be back here tomorrow morning. First things first. Tomorrow morning at I think it's 7 a.m. Eastern Standard Time, we're going to have the Good Morning Crypto Show with Lunar Beaches and Blackie Channon here. I'll be on at 9:30 a.m. Eastern Time tomorrow for the morning market report, looking at the market open and going through all this data as it happens. And then tomorrow evening, it is going to be time for FD White and TradeFly to do the Crypto Nightcap. All kinds of content here on for you. We are going to keep it coming, whether it be good news or bad news. I'm not going to cherry pick it. I'm not here to protect anybody's feelings. I'm here to educate and make people aware of all the data that is out there so that they know and can make their own decisions. I will catch you guys right back here tomorrow. Until then, trade safe. And if you're going to invest in some blue chips right now. That's what I'm doing. So we'll catch you guys later. Peace.
It's a stop loss.